This was a clean option scalp, up 20% in under 20 minutes. All right, so we have figured out that 20% is the sweet spot. So here we are opening in +3. That's the location. Shout out to OV. All right, now we are anticipating a gap close, but it's not just a matter of what when you're trading options, it's a matter of when. Please subscribe to the channel, leave a like, and comment down below. Let me know how you feel about the videos. Let me know how you feel about trading options. So we put this purple line in here. This is going to be our stop loss. The purple line represents the candle that we entered in. Ideally, when this candle is taken out, we cut the loss. All right. However, we must also remember that on this channel, we fill in the gap. Yes. Filling in the gap allows us to see the continuation from the previous day. So we don't have to feel like this is an opportunity for the market to fake us out. No. We are going to fill in this gap with a trend line that is going to show us the distance from the previous candle as well as the color. So if we gap up, we fill the gap with the green trend line and we switch to the thicker line so that it can emulate a green candle, a bullish move, because that's what a gap up is. A gap up is a bullish move. So as we watch these candles form, we go ahead and we fill this gap with this green candle, this green power bar, because a gap up is a power bar. It's a power move. And now, what are we looking for? Well, with such an extended move, we are anticipating some type of a pullback. And when we get a pullback, we don't just react, we assess. Yes, we have to assess the quality of this pullback. Is this pullback pulling back and remaining in the top third? Is this pullback pulling back and cracking the top half? And if we are a distance away from the moving average, specifically our key moving averages, the 200 period moving average and the 21-day period moving average, we are anticipating a move back to the average price. All right. So as we look, we are watching this pullback happen. We are studying it. Now we also have to be mindful. This is a bull flag being created. All right. This is a bull flag being created. All right. You see the slant down. So we are anticipating a pop up if this level holds. All right, but right now we are excited. We are feeling confident that we are going to continue to the downside. All right, but we are prepared to cut our play if we lose that purple line. All right, we are prepared if we lose that purple line. But it looks like we are continuing to the downside. So this is a key level that we need to be held. This is a key level we need held. And if we can hold this level, we're definitely moving up to the bullish side. We're moving up to a new high. But we're in put, so we want this level to fail. All right, but this is also a tricky area. These are previous levels of support, which are the horizontal lines drawn. So I'm anticipating some kind of a resistance here. And because we do have this bull flag, it is a chance that we're going to move to the upside. But again, we're prepared to mitigate the risk by cutting if we lose 694.09 with hopes or conviction, should I say, not hope, but with conviction that we are going to continue to close this gap or at least close halfway down. So this is what I was anticipating, this bull flag. All right, this slant down often gives us a pop up. And then we want to see, once that pop up happens, is it going to create a new high? Are we going to continue to pump? Or is it premature? Is it premature and not quite powerful? So are we going to reject this move up and continue to the downside? Now again, when we get to that apex of a wedge or a bull flag, it's essentially a version of a wedge. When we get to that apex and we pop up, if that fails and it doesn't continue to pump, then we know that that's going to be an interruption in our move down. So whatever the previous distance was from the beginning of that move down, which is 694.69, to that interrupt, once we see that interruption fail to be a reversal, that's going to be our halftime show. And we're going to look for a continuation to the downside about equal distance from where we started at. Don't let that go over your head. Don't let that go over your head. All right, so now we are looking for this move to come down and touch the 21 period moving average. All right, but we still need to break through these two levels of support. All right, we need to break through these two levels of support. We're in two contracts. We played small because you need to play small. Playing small has allowed me to remove the emotions from the trade and allowed me to focus on strategy, timing, the details. All right, it's not as exhilarating as it once was. It's not such a thrill-seeking event. It's more about being precise, being on point, being disciplined, being consistent, seeing the patterns, executing them. It's like going to the gym, working on your combos, and then you get into the spar, you get into that live action, and you starting to see how it all comes together slowly but surely. You still take your lumps. You still gonna get knocked upside your head. It's a fight. You're gonna get hit, but you start to put your moves together, establish your style a little bit. All right. So, and sometimes, it's easy to get on here and chat and talk from a place of expertise, but sometimes the market is giving everybody W's. Everybody's winning on puts on SPY this week. All right. So it's about taking this opportunity to learn and see what the patterns are, how things are going better, how things have changed for the positive in your strategy, in your trading, in your journey, and continuing to put those pieces together. All right. So here we are looking for 20%. Whether we got one contract, two contracts, or 10 contracts, we want to be consistent with our 20% because we know all we have to do is add contracts and we're going to add profit. All right, but we want to be consistent. When we see these openings, we want to know what it is, know what the probability is, know the different looks. All right, look at that. Another pop. Another pop. That's what the bull flag is going to give you. And we're continuing to fight and struggle to break through this support level. All right, that probably was another opportunity to add. Again, the longer we hang out at this support level, the more you see the moving averages start to get pulled up towards us. All right, so it's like a dance. We're like gradually moving toward each other. All right, we're gradually moving toward each other. All right, 691.72 is the 21 period moving average now. But as we continue to move up, 691.72 is going up as the price pulls, yanks. It's like it's tied to a rope. So we get to see that, okay, so that pop up never broke our stop loss. Never cost us the candle that we got in on. All right, continue to get rejected there. So we're safe. Can't touch this. We are safe. And now we're continuing to pump down. So that pop that we saw wasn't, if it was like a fake out. So if you would have used that as an opportunity to go bullish, to go green, you would have got caught up in that fake, that false move to the upside. And it's just stalling. It's just the price is stalling off to the side. All right. But the pops failed. And now we have this Marubozu candle being formed, wiping out the last 3 green candles that we just saw, meaning we are going down. But we're not going to hang around here all day. What percentage are we looking for? 20. That's right. That's right. 20 under 20. 20% and under 20 minutes. That's how we want to start every trading day. All right, so here we are. Ideally, we want to see this thing touch the 21 period moving average, but we're not going to wait for that. That could be a fake out. That could be greed. So here we are. We already took profit on one contract. We let it dance a little bit, and then we came down here and took profit on the second one. Please subscribe to the channel, like this video, and comment down below. Peace and love, and I'll see you in the next one.